Let's turn to oil now. Crude prices jumping more than 8% this week, their best week since October, and the Chartmaster sees even more upside on the horizon. Let's bring in Carter Worth of Worth Charting. Carter, what are you looking at?
Well, it was a firm day. I mean, we know nat gas was up 3.5%, oil up 2%, while industrial metals down 2%. Let's look at some charts. I only have two. One's a short term, one's a long term. So dispense with the line that I've drawn. We would all agree, right, this is a downtrend. It's moving from the top left to the bottom right. But the rate of descent is abating. We have a series of lower, high, lower, but no new low, no new low, no new low. And so you're starting to get a formation, I think, that's setting up like that. Now let's look at this exact same chart and pull it back. Second of two charts. So that's that line we were just studying. And what we have here, again, is so often the case, the lines inform almost everything. Where does it bounce? To the penny. Where does it bounce? To the penny. Where did it stop here? To the penny. And so now this is an inflection point. Does it have to go up? No, I'm sure there are people betting otherwise. My thinking is it does go up. We put in the green arrow. I think 85 is where we're headed. We closed at 79.72.
Carter, thanks. We will see you shortly on options action. Meantime, let's trade this. I mean, that's no lines, no judgments, right? That's what the Chartmaster does.
As it always is with Carter.
As it always
Never
is.
a judgment.
No,
I mean,
right. But, you know, we got news today. Russia's going to cut production starting in March, and that's certainly going to impact the global oil picture here.
It's always to the penny. And I think you have a case here where I believe that the energy supply dynamic is not something that changes anytime soon. And I think you can even make an argument that if you saw some miraculous settlement with Ukraine, which the world wants to see, but the more important point is that there's been a lack of spending in infrastructure on CapEx and OpEx in the energy sector for many, many years. And what the market wants to see, and I mean the stocks, they want to see an oil price that's stabilized. This is an oil price that's stabilized. We've traded in a range now for 3 to 6 months. Oil's, as they say, oil companies and energy companies don't rally when oil prices are spiking because nobody believes that price is sustainable. We're just getting through. In fact, the energy earnings this week that came out of a Pioneer or some of these other companies, they were very strong. We continue to hear about higher payout levels. We hear about debt pay downs. And back to what Jeff said, you want to find companies that are increasing their cash flow and companies that are going to do well in this environment. The energy companies are a place you're going to get that.
Well, and the capital discipline. I mean, think about an ExxonMobil, for example, right? Record profits, but they're still talking about cutting costs and managing that side of the business. I think that's important for these companies. Sure, you can argue that they've over-earned over the past year, but at these multiples, I still think the stocks can do pretty well. If you look at the charts, they're still relatively supportive. And just the last thing I'll say quickly, because Carter brought up natural gas, if you look at the bullish sentiment relative to natural gas prices, it's as low as it's been, I think, ever. So I think I would pay attention to that. I would pay attention to a stock like LNG, for example. It's at a very interesting technical point at support. So that's maybe a stock you can play here, too, for a trade.
Yeah, and I definitely like energy. This is one of my letters, my acronym here, so I'm definitely bullish on this. But, Tim, you bring up some good points. The supply and demand constraints have not gone away. If anything, they've gotten worse since China reopened. And I also think when you look at the long-term earnings growth in energy, it's actually still, believe it or not, expected to be better than even your technology sector. So, yes, it may not outperform to the magnitude that it did in 2022, and that's why I think a lot of people have just put it by the sidelines. But it's still going to do very well this year, and I really like his charts here. I would still make sure you have this in your portfolio.
I mean, an environment where you're questioning growth, where you're questioning big tech, and you're wondering where to go and how this economy lands. I mean, energy seems like the fundamentals don't change, even soft landing, hard landing, whatever it is.
Well, some people are going to point to potential cyclicality in energy demand, but I think we just argued against that. Yeah. It's about energy, it's about big pharma, it's about healthcare, and I think the staples trade this week. I think a lot of these staples companies have seen some of their best days, and I would not be chasing these multiples here.